China's economic growth has missed estimates. The world's second largest economy grew at 6.3% in April to June quarter. This is way slower than the growth estimate of 7%. The data adds to worries for Chinese officials, especially on the back of rising unemployment and weakening property demand. Exports too declined almost 12.4% in June from a year earlier as global demand took a beating. The government is expected to double down on support for the faltering economy post-COVID-19 recovery or the lack of recovery thereafter. Unemployment too is way high to a record of 21.3% in June. This is for young people aged between 16 to 24 years of age, up from 20% the month before. Chinese policymakers are not having to fight inflation. They may end up in deflation, but things are not looking very good for the second biggest economy in the world. And we are, of course, discussing what does Chinese economy, or rather lack of growth in Chinese economy, mean for India and for world at large, as well as whether there is an opportunity there. With me at this point in time is Kartik Malhotra, and also joining us is Krishnakumar. Kartik, I want to begin with you. This is a story we discussed this morning. Chinese economy not doing too well, perhaps not able to come out of the COVID restrictions just as yet. You said something very interesting that I picked up this morning. You said it's yet to bottom out. We are yet to see the worst when it comes to China. What does this mean for India?
Shweta, I think what this means for India is that there is an opportunity available that can be grabbed, that can be seized with both hands unflinchingly. So I think this is the moment where India's manufacturing prowess needs to rise and shine for the world. But I think going back to China, number one, it's difficult to trust any data that comes out of that country to begin with, right? Now, this is economic data. This is the print which is released by the Ministry of Statistics in China. And a 6.3% growth seems like a decent growth. It doesn't seem like negative growth for sure.
Right.
It seems like a good number. But remember, it will remind you pretty much of the recovery we saw in 2021 in India. There was something referred to then as a K-shaped recovery. Because you had bottomed out and gone in the negative territory, that even a few positive points up seemed like a good K-shaped recovery. That is what you're seeing in China right now. When you look at the Y-on-Y data, a 6.3% is against a complete shutdown in the country, which resulted in hardly any economic activity. So you're growing 6.3% from there. Even if you look at the sequential growth on a quarter-to-quarter basis has come at just about 0.8% or so. So between Jan to March and April to June, the delta in growth has been under 1 percentage point. Now, what I said in the morning, and I think I will stick to that, is that it's been just about 6 months or so since the zero COVID policy in China got lifted. Restrictions lifted 6 months ago. Businesses started opening shop once again 6 months ago. And in these 6 months, what has really dampened the spirit has been, number one, no consumption. So Chinese citizens, the population at large, is holding on to cash. So it's not going ahead and making purchases from the streets. It is not really going ahead and making any capital expenditures also. And these capital expenditures, especially on property. So China had a massive property boom right until COVID hit in 2019 actually in China. It came to the world in 2020. So until 2019, the real estate sector in China was a behemoth sector, and that was something which was driving the engines of the economy, in addition to the exports, because China being the factory of the world, the manufacturing hub of the world, there was one component of their GDP which was export oriented, and the other, of course, was consumption, and consumption both on consumables as well as capital expenditure in property. But that hasn't kicked off at all. Add to this unemployment rate in excess of 20%. The youth in the country, 1 out of 5 people in the country continue to be unemployed. And then there are ghost factories. Because there is a global slowdown, because demand from the US and Europe and other markets that China was earlier a major export partner to, have slowed down on their own consumption. Now, what is the central bank in China doing in the midst of all this? it has, instead of tightening monetary policy, it has loosened monetary policy. So last month, it announced a 1 percentage point, 100 basis points cut in interest rates. Now, a cut in interest rate is obviously going to have a significant impact on inflation, which in any case is a problem in China. But add to that, the credit offtake, which the country is hoping for industry to do with this reduced interest rate, is actually going to make its own currency even weaker against the dollar. And the currency already over the last 1 year has gone from 0.3, 0.4 yuan per dollar to about 7 rupees per 7 yuan per dollar. So there has been a massive jump in the value of the yuan, in fact a reduction rather in the value of the yuan against the US dollar. There is a looming property crisis. One of the biggest real estate players, the China Evergrande, has, after its debt restructuring for about $80 billion or so, failed last year. Right now it is running a risk of about $380 billion on its books. So there is a currency devaluation, there is unemployment, there is no offtake of real estate, and exports have slowed down, ghost factories have emerged. So overall, the situation in China is bleak. Now, is this really an opportunity for India? I think it is definitely an advantage of desperation which could run in India's favor right now. And this is when I think India can immediately go back some orders from the West, erstwhile importers of Chinese goods and services, and go ahead and see some long-term contracts, because we will take time ensuring our own production chains and our own supply chains, assembly lines. By the time they kick off, it's going to be a while. So we need to look at long-term deals that we can do with bilateral global partners and take some piece of the Chinese manufacturing pie here to India.
And even before the zero COVID restrictions kicked in last year, or they were taken off by end of 2022, major companies, MNCs, manufacturing hubs had started already pulling out of China, and India therefore emerged to be an alternative China plus one strategy that the West was looking at. This is a right appropriate moment. I mean, given all the gloom and doom in China aside, and how that's going to hamper or impact Chinese nationals, this is in fact a great opportunity for India, Krishna.
Oh, absolutely. Let's look at a couple of things to start with. One is that I don't think anybody should use the word degrowth when it comes to China, because degrowth is a larger term that, when your overall production and consumption goes lesser. What is really happening is a slower than expected or slower than usual growth that China posts when it comes to its economy. This is the famous economy that posted consistently double-digit GDP figures for an entire decade. Bear in mind, and look at the numbers we're looking at right now. Less than about half of that, 6% is what we're looking at. And that's for the last quarter. So what has first happened with those numbers that came out is that Wall Street has downgraded its growth forecast for the Chinese economy to 5% for the entire year of the upcoming financial year, that is 2023-24. So which basically means that, they're telling banks to cut their exposure to the Chinese economy. That, they're looking at a future where the financial world is looking at cutting its exposure to the Chinese economy based on the fact that the economy is not growing as fast as it ideally should, and it's going to grow at 5%, which means it will grow slower than India. I mean, and if India is going to be on the growth path, from 7 to more to 8, hopefully, then you're looking at a stage where China is going to be consistently growing at a slower pace as far as India is concerned. This is a turning point. This is a pivotal turning point because from here, for China to get back to its double-digit growth levels is going to be extremely difficult because the economy is not at the same growth cycle, at the stage of the growth cycle that it was 30 years ago. Whereas India is concerned with that, huge demographic advantage also to it, is poised in the right way. Add to it all the geopolitical factors, like the fact that countries are telling their companies to shift their production bases outside of China, and that's already begun. As you rightly pointed out, the COVID restrictions itself was the beginning point for everybody from Apple to you name the biggest electronics and technology manufacturers in the world. They've been shifting out of China already, so which means that that's been factored into this lower growth, is my understanding. I mean, if I'm not wrong, as Kartik rightly pointed out, it's the Chinese government's data that we're still discussing. Nobody knows the actual data.
Come
What
to
exactly?
think of it, their projection for the entire year is very conservative at 5%. The growth that they're projecting is 5%. So that is not very high. I mean, as opposed to India, we're hoping to grow at 7%.
Exactly what I'm saying. So Wall Street too has cut its growth forecast on the basis. That's this is Chinese data, as Kartik was talking about, and also bear in mind, you know how China calculates its GDP, right? Its cost of the product. It's like, for example, for an apartment, it's not the cost of the sale of the apartment, but the fact the apartment got built. So all the money spent in building that apartment is what is counted as GDP. So first of all, it follows a very different format. And even by that metric, it's not doing as much as it should, which means the number of ghost cities and ghost towns that we heard of in China, where things were built and they were not sold, are probably increasing as we speak, Kartik.
Absolutely. And add to that, I think the whole geopolitical mess that China finds itself in right now.
I was about to come to that. I think that's also very interesting to point out, because this comes at a point where a lot of Western countries were already not going in for China. They were not falling for China. They were not hoping for China to be their essential mandatory hub. They were looking for an alternative. And all of that, coupled with the fact that Chinese economy is not doing too well, it's like a double whammy for China.
Totally. But let's look at some of the key sectors which are going to be potential drivers of growth for the world at least in the next couple of years or so, right? It's difficult to take a long-term horizon because the rate at which technology evolves and changes is difficult to forecast. But I think what is critical right now for the world is semiconductors, right? Semiconductors is something where US had a sizable advantage over the rest of the world, primarily given the technology, not the material. Right, the material, which we've read those stories and we've discussed in the past. The material, the raw material that goes into the semiconductors, into building those very, very small size nano chips, is not silicon. Silicon is just one of the materials which is abundantly available in the world. But I'm talking about gallium and which is the other element. It's skipping my mind right now. These are the two main elements that go into these precision chips, into semiconductors. And China, in its bid to flex its muscles against US, has said that we are going to stop exporting this and adopting something which we refer to in our growing years as license Raj. Now, this is license Raj. You need a permit, you need approval from the government, and you need a full-fledged disclosure of who you are exporting to and how much you are exporting and at what rate you are exporting before we give you a go-ahead to export, which pretty much says that please do not export to the USA.
Restrictive trade practices.
Restrictive trade practices, right. So completely restrictive, and why did China do that again? The geopolitical mess that I was talking about is because US has asked its own semiconductor manufacturers, and big ones at that, including Micron. Nvidia, to not export fabricated semiconductor chips to China, because US doesn't want China to gain an advantage over USA in the artificial intelligence game, which runs pretty much on these semiconductors, right? The servers that power artificial intelligence need these microchips and need these semiconductors to get powered up in the first place. Now, is there an advantage for India in the semiconductor space? I don't see that opportunity yet. Though we have, again, geopolitics.
Very realistic, Kartik.
What have we seen? We've seen Foxconn and Vedanta splitting apart. That was the only one real tangible semiconductor deal on the table. Now, both of them are looking for technology partners.
Actually, Foxconn's got two technology partners already.
There's
signed
always
two
a slip between an MOU and an agreement and exchange of cash.
Not
we invite
sounding
foreign
like
players.
If I may,
I think we invite private players internationally to come to our states, Tamil Nadu, Uttar Pradesh, right? Enough and more states, vibrant Gujarat to begin with, right? Enough and more states hold their annual investor conferences, investor meets, and these large pomp and show expos where they sign MOUs worth hundreds of crores of rupees. How many of them actually fructify? Very few. So signing a deal, signing an MOU, and actually receiving the check or implementing that foundation stone for a semiconductor factory, there's always a slip and between the cup and the lip in that, and then it will take at least a few years for those semiconductor plants to start start pumping out semiconductor fabs. So on the semiconductor bit, I don't really see India making a massive dent in the next couple of years, which is why I'm saying let's keep our horizon only the next few years.
Absolutely.
Right, and the next one is batteries. Sorry, Krishna, I'll just come back to you. The next one, I think, is batteries.
Right.
So electric vehicles is the demand of the whole world. Look at the news that came from Tata JLR yesterday. Tata JLR is setting up a battery plant in United Kingdom. And that's not a labor-intensive country, so to speak, as India and China have been, right? We don't have the technology, we don't have the raw material. We found lithium-ion reserves in Jammu and Kashmir, but God knows whether we will ever be able to extract them, and will we really deploy them into manufacturing of batteries. So I think these are two emerging global trends right now, semiconductors and batteries, which the whole world is looking at, and China squarely has an advantage over India still. So what should India do? What can India do? What will India do to quickly sign up some long-term contracts and get this infusion of capital and technology and raw material to start producing these critical units in India is something that the government should look at very seriously.
All right. Krishna.
Right. You asked a question which you said, is there an opportunity? So I think Kartik was talking about how the opportunity is not being leveraged well enough or fast enough. But is there an opportunity because of what we're discussing today, because the way China's economy is, because of the kind of geopolitical disadvantage that it finds itself in? Yes. And here is an open door for India to pounce in on it and make the most of it. But as Kartik also mentioned, we live in a very volatile, complex, uncertain and ambiguous world where technology changes very fast. Remember the first time tenders were given out for semiconductor chips, they were for 28 nm chips. And then immediately I got revised to the 43 nm chips.
40 mm or 43. Yeah.
43 nm chips. So which means that things are evolving. So in a 1 to 2 year timeline, would you see a major difference? Probably not. But should we have a 5-year timeline by which we want to accomplish at least setting up of a fundamental base of semiconductor manufacturing and electronics manufacturing? Oh yeah, we have an opportunity. We have all the biggest brands already wanting to make the biggest phones in India. Starting with the Apple iPhone 14. I mean, did we imagine a time 5 years ago when Apple would be making its latest model iPhone or shipping them out of India? And today it does. And guess what? It's only wanting to do double, triple more in multiples of that. So keeping the international interest in mind and the fact that China has become a no-go zone, I would expect that despite some of the tumbles that we're going to take, the money is eventually going to flow in.
It's interesting because when you talk of China, the first thing that comes to your mind, and for a layperson who's watching us out there, is the fact that it is the manufacturing hub of the world, right? And it's already losing out on that entitlement due to various reasons that we just discussed. Does that give India enough opportunity? Because we've been lagging so far in manufacturing and exports comes next. Do we have enough red carpet out there rolled out for big players to come in and set shop in India? Do we have every policy in place? Do we have enough bandwidth for and enough leverage to invite these big companies and ask them to look at India as an alternative?
So I think there are 3 or 4 critical challenges that India still needs to work on. You talk about opportunity, Krishna also mentioned that, and I agree, yeah, the opportunity is there, but the opportunity is there for the whole world to exploit. Will we be in the right position, right policy, structural, legal framework to seize that opportunity? In the immediate foreseeable future, I don't see it happening, right?
Okay.
But what I really want to refer to, Shweta, you asked about, sorry, what was your question? We were talking about
manufacturing
hub.
Right. China being a manufacturing hub, which it still continues to be.
It continues to be, despite the ghost factories, ghost cities,
Absolutely.
and
there's
unemployment.
There's weak demand,
right.
Hence the exports are lower.
There are 3-4 critical issues which are at play here. Number one, land reforms. Right, it's a major pending to-do list item on India for the longest time. Right, land reforms, acquisition of land from states, from center, farmland, this land, that land. I mean, we've seen in our lifespan, in our careers, we've seen the West Bengal Shringur plant of Tata Nano being evicted almost overnight, moving to Gujarat. Right, so we have land challenges. We have labor reforms pending, and labor reforms is one. The other, of course, is also skilled labor, access to skilled labor. These are 2 critical functions that India needs to work on. Add to this ease of doing business. We haven't really, in the last 10 years or so, since we've been talking about ease of doing business, we haven't scaled up that value chain drastically. We've taken very, very small steps, 2 points, 3 points, 4 points year on year, but we are still one of the laggards when it comes to ease of doing business. Fourth, most important one, I feel, is enforcement of contracts. Now, I think when any large player internationally wants to look at India and seriously consider India for doing business in, I think enforcement of contracts and the lack thereof becomes a major country risk for India. So if India is able to work on these four: land, labor, ease of doing business, and enforcement of contracts, I think India will have a much sweeter spot in global trade than it is in a position to command right now.
All right, so China's loss may not necessarily be India's gain. And if you look at it rather than from an optimistic point of view, more a rational point of view, all the reforms from land to labor that Kartik talked about continue to pose major hurdles and challenge for companies wanting to set shop in India.
Oh, definitely. As I said, we will take a few tumbles. I'm really looking at the long term over here, Shweta, because the near term to me still seems extremely hazy. You're looking at an economy of the size that India is, and that's going to grow by $1 trillion every 18 months is the prediction at this stage. You're looking at, when you want to set up a manufacturing base, you need an economy that has the capacity in terms of both money and in terms of manpower. And, India does have both in that sense. Policy making, regulations, yes, that's another ballgame altogether, and we're progressing in that, and we have a lot more progress to make, specifically at Kartik's talk about, both in terms of land reforms and labor reforms. And the competition, incidentally, comes from other Southeast Asian countries. You have Vietnam, we have Vietnam, Taiwan. Taiwan's back in the bay. Taiwan is like, hey, semiconductor, you're not checking with us. We made all semiconductors in the world at one stage. So you sort of the competition, the playing field sort of gets redrawn. Where the way it was before China was this behemoth 30 years ago. So in that sense, it's like, okay, you go back there, great starting point. That basically means that you're in race with 5 other countries which are nimbler, faster, they can make regulations quickly, get all the players in. And once that...
to give it to India, they're also communist countries, half of them are dictatorial countries, so it becomes really very easy to pass reform as opposed to a democracy like India where you have farm laws which
I would say even democracies. I would include democracies in the game as well. It's not just the nature of the governments of these Southeast Asian economies. Some of them are normal democracies, and that's perfectly fine. And my point here is that they're also not new to the manufacturing game. They've been lagging behind simply because, again, China has been taking away overwhelming part of that business. Same way we've been affected. We have had a traditional issue with setting up a manufacturing base in this country. We've let it go for 3 to 4 decades, and we're looking to rebuild it from scratch. Yeah. So in that sense, our manufacturing base is as big, or as small as these other Southeast Asian economies because of simply how far behind we are in terms of manufacturing. So here it is. It's a nice level playing field. India has to make the right moves. Let's not forget that these Southeast Asian economies are also thinking the same thing. When we make mistakes, then it's going to go to India.
And they have an early mover advantage over us, especially on these 2 aspects that we spoke about. Let's say batteries, for example.
Yeah.
Semiconductors, of course, we know Taiwan is obviously the most rational, logical destination for anybody to set up
as the best alternative to China.
As the best alternative to China, right. Yeah. But let's talk about batteries. Japan, a developed economy, already in the EV battery manufacturing space, the supplier to almost every EV running in the world right now, right? In addition to China, Japan is another economy which can very quickly, very easily scale up its EV battery manufacturing. And that's not going to take rocket science, right? It is going to take battery science for us. But it's this opportunity is there for Japan to take for not just the rest of the developing emerging markets block to seize, but even for countries like Japan, I think. And now Tata JLR, like I mentioned, setting up shop in United Kingdom to manufacture. I mean, who heard of new manufacturing units being set up in Europe?
Fair point. It's a super point that Kartik is making. Yes, so our competition is not just a small Southeast Asian country, but a huge industrialized developed country like UK. And ironically speaking, it's an Indian company that's setting up a battery manufacturing shop in the UK. So India has to be very aware that while the playing field is now open, it has to move and move fast. But here is the deal. I'm an optimist. I'm a converted optimist who was originally not, who originally described himself as a realist, not a pessimist. But from a realist, I've moved on into an optimist because look at what India did with just telecommunication. With the most basic forms of telecommunication in 2G and 3G, we manufactured engineers and talent over decades, that went and created so much wealth for India outside and could do so much with it. My point is that, and even then, we complained about the way 2G spectrum was introduced. And then, of course, the 2G scam came out. 3G, again, 3G is not the real 3G, and then 4G is not the real 4G. So we have issues with all of these things that we did. But despite the mistakes, despite the shortcomings, the fact that we've been persistent with these, with going to telecom, seeing that as the future, I think will also pave the way to reverse integrate from software to telecom to hardware and manufacturing. It's a reverse integration is what India needs to do. India is fantastic at services. India is fantastic at software, making software and providing services. It's time that India sort of backward integrates into hardware as well. And if you ask me, you talked about Tamil Nadu and UP. Look at Tamil Nadu, state like Tamil Nadu, great manufacturing legacy in a country which does not have a great manufacturing legacy, and the talent pool to supply to these factories that are going to be set up outside of Chennai. So and that's how we need to look at it as in India. We need to pick pockets in India where it's already booming. You already have a manufacturing base. You have logistics and infrastructure already there, a base already there, and sort of leverage that to move away from just auto manufacturing, which is the case be it in Tamil Nadu or Pune or Haryana for that matter, and convert that into other manufacturing, everything from semiconductor chips to iPhones. I'm sure we three are not the only ones thinking about it this way. There are people who are formulating policies and wanting to get this done, also thinking about it. And I would also add to this that all of this will also mean that the Indian private sector, from startups to mid-sized companies to big companies, will also, if the Tata Group is looking at setting up a battery plant in the UK, how long before it decides to do something similar in India? Not very. I would say, as an optimist, can happen.
Okay, I think perhaps India can take a leaf out of Tamil Nadu's book and learn from Tamil Nadu's example.
Can I just say one example when you talk about Tamil Nadu all the time? Strangely, the electronics manufacturing output of Tamil Nadu and UP currently is the same. Is the funny thing is that if you just account for it's not very different. Just the manufacturing of electronics, which is not too much in the first place. Whatever is the less so far. Tamil Nadu and UP in a sense manufacture a similar amount of output is pretty much similar, which is what needs to change. Which means that Tamil Nadu with all its strength needs to be producing lots more, and UP because again it has a demographic, young people, educated people who come and work in these factories and the land. With the right land reforms, hopefully, UP also offers a great alternative, both the north and south. So, that's how things stand at this stage.
Krishna, thanks very much for that insight. Appreciate you both taking time out and joining us on this very important story.